Welcome to another deep dive. Today we're tackling Long-Term Secrets to Short-Term Trading by Larry Williams.
Oh, yeah, this one's a classic.
It really is. And I think what makes this book so fascinating is that, Williams himself, he's traded like over 1,000 contracts a month.
Wow.
For decades. So he's not just some armchair theorist, Yeah. He's been in the trenches. And he really understands the nuances of short-term trading.
Yeah, that's such a crucial point because I think a lot of people underestimate just how challenging short-term trading really is.
Absolutely.
It's not just about picking the right direction.
Right.
You need to be incredibly precise with your entries and exits.
Totally.
To really maximize your profits. You need to master both price and D time.
And that's one of the big things that Williams really emphasizes in the book, right? He challenges this kind of widespread belief that the market is completely random.
Yeah, like a coin toss.
Exactly. Yeah. But he presents, decades of data that suggests there are these distinct biases in market behavior, specifically when it comes to certain days of the week and even certain days of the month that tend to show recurring patterns.
Like what? Give me an example.
Well, he points out, for instance, that the S&P 500 tends to see more rallies on Mondays, while bonds often perform better on Tuesdays and grains on Wednesdays.
Huh. So there are these sort of rhythms to the market based on different participants.
And it's not about some mystical force controlling the markets or anything like that, but it really comes down to understanding who's active when.
Makes sense, like who's selling, who's buying at certain times.
So instead of just blindly, following that age-old advice of buy low, sell high,
right,
Williams suggests that if you can time your entries and exits based on these cyclical patterns, you can significantly improve your odds of success. Which makes me wonder, how exactly does he recommend using this information, practically speaking?
Well, he introduces this concept he calls volatility breakouts, which goes beyond just looking at, price movements. It's about identifying when a price accelerates beyond its typical range.
So it's not just whether the price is going up or down.
No, it's the speed.
It's the speed at which it's happening.
Exactly. And he's actually developed a formula for measuring this acceleration, which helps you pinpoint these potential breakouts early on.
Okay, so how does that actually play out in a trade?
Well, he found that these volatility breakouts, they often tend to close near the high of the day if it's an uptrend, or the low of the day if it's a downtrend. So you're essentially riding that momentum wave.
It sounds almost counterintuitive, though, right? Most people, they think, oh, a stock is dipping, time to buy, or it's rallying, time to sell. But he's suggesting you do the opposite.
Not always. It's not about just blindly buying strength or selling weakness. But often, the most profitable opportunities come when a move is already underway. So yeah, sometimes you are, in essence, doing the opposite of what most people would do.
And I know he illustrates this with, what does he call it, the smash day pattern.
Yeah, the smash day. So imagine a stock gaps up at the open and just climbs higher and higher.
Looks great, right.
Looks unstoppable, right. But then, towards the end of the day, it suddenly plunges.
Oh, man.
And closes near the lows. Now, a lot of people might see that and think, oh no, the trend is reversing, sell. But what Williams points out is that the pros, they often see this as a confirmation of the move, and they'll continue to sell, pushing the price even lower.
So in a way, they're using the public's perception, their fear.
Totally. Absolutely.
Yeah.
They're not reacting emotionally. They're acting based on their understanding of market dynamics and their understanding of how players behave in certain situations.
And I think that's where all this stuff about those cyclical patterns comes in too, right? Because that can help you anticipate when these kinds of smash days might occur. It all points to the idea that trading isn't just about having a good system, but it's also about understanding the psychology of the market.
Oh, yeah, for sure. Like, you have to know who the players are, how they think, how they're likely to react in certain situations. You got to be one step ahead.
And that's where I think he introduces this really powerful tool, the Commitment of Traders report, or the COT report, as it's often called.
Oh, yeah, the COT.
This report is a weekly report put out by the government, and it gives you this little glimpse into the positions of different types of traders in the futures market. And Williams argues that if you pay attention to this, it can give you a real edge, especially in understanding what he calls the smart money is doing.
Right.
And he basically breaks down the market participants into three main groups: commercials, large speculators, and small speculators.
And the commercials, they're the ones with, like, inside knowledge, right? They're the big players.
Yeah. And his big insight here is that they're usually right.
Oh, interesting.
So for someone like our listener who maybe doesn't have years of experience poring over these reports, how do they actually use this effectively?
That's where the Williams COT index comes in. It's not about just glancing at the report. It's a specific calculation he developed. You're looking for significant shifts in the positions of the commercials, which can signal these major turning points in the market.
So you're basically trying to spot those moments when the commercials are making these big bets in one direction or another, because that could indicate a shift in overall market sentiment. You're trying to get ahead of the curve, basically.
Exactly.
That's fascinating. It's so cool how he combines all these technical and psychological insights into this very comprehensive approach.
And he doesn't just give you a set of rules.
Right.
Like follow this, do that. He wants you to understand the why. Why are you doing this?
Yeah, the thinking behind it.
So you can adapt as a trader.
And I think that's what makes the book so valuable, especially for someone like our listener who's eager to learn.
For sure.
It's like having a mentor who's guiding you through the intricacies of the market, sharing not just knowledge, but experience, wisdom. So let's delve into some of those more nuanced aspects of Williams's approach, shall we?
Let's do it. I'm ready.
Because it's not all about charts and data. He's very clear about the importance of psychology.
Oh, absolutely. Psychology and risk management.
Yeah. And those are often overlooked, but they're so crucial.
They really are. They really are crucial for consistent success.
Yeah. I mean, he talks about the need for discipline and patience, waiting for those really ideal setups instead of chasing every little move. And honestly, that's something I personally struggle with.
Yeah, me too.
It's so easy to get caught up in that FOMO.
Oh, tell me about it.
The excitement of the market.
Right.
But he makes this point that less is often more.
He's a big believer in quality over quantity. And that ties directly into another big point he makes about controlling your losses ruthlessly. Actually, he says that greed, not fear, was his biggest enemy early on in his trading career.
That's interesting, because you would think fear of losing money would be the main driver, but he's saying it's actually that desire for more that often leads to bad decisions.
Yeah, it's that impulsive urge to squeeze every last penny out of a trade, even when all the signs are telling you to get out.
Oh, yeah.
So he stresses the importance of having clear exit rules and sticking to them, no matter what your emotions are telling you.
And this is where he talks a lot about the importance of using stop loss orders, right? And I'll admit that's something I used to I always thought I could outsmart the market.
Sure.
But over time, I've realized just how essential they are in protecting your capital.
He's adamant about using stops.
Mm-hmm.
And not just setting them arbitrarily, but really calculating them based on your system's historical drawdown. It's about managing risk in a way that allows you to stay in the game for the long haul.
And this kind of leads us into another topic that I think is often overlooked, especially by newer traders: money management.
Oh, huge.
Williams is really emphasizing that it's not enough to just have a winning system. You need to know how to manage your capital effectively to turn those wins into substantial wealth.
He's really critical of approaches like the Kelly formula, which can lead to these massive swings in your account balance, even if you're generally profitable.
Oh, wow.
He advocates for a more risk-based approach.
So what does that look like in practice?
He suggests figuring out the maximum percentage of your account that you're willing to risk on any single trade, keeping it relatively low, somewhere between 10 and 15%.
So you're setting a hard limit on your potential losses, no matter how confident you might feel.
Exactly. And then based on that percentage and your system's historical maximum drawdown, you calculate the appropriate position size for each trade. So even if you hit a losing streak, you're not wiping out your entire account.
It's about staying in the game.
It's about preserving your capital so you can keep playing.
And it's such a simple concept, but so powerful. It really underscores the fact that trading is as much about managing your emotions and your money as it is about understanding the markets themselves.
Right. And speaking of understanding the markets, one thing that stood out to me was Williams's emphasis on what he calls modeling successful traders.
Yeah, he talks about how he spent years studying not just their trading systems,
Right.
but their beliefs, their behaviors, even their language. It's like he was trying to decode their DNA.
Absolutely. He really stresses that success in trading isn't just about having the right technical tools, but also about cultivating the right mindset. He observed that winners often share certain qualities, like just unshakable belief in themselves and their ability to succeed.
Like this unwavering confidence that they'll figure it out, even when faced with setbacks.
Yeah, they understand that trading is a challenging game, but they're not deterred by that.
Uh-huh.
They embrace the challenge.
Okay.
And they're willing to put in the work to develop the discipline it takes to win. And that often involves a lot of practice. Williams is a big advocate for paper trading.
Yeah.
He sees it as an essential tool for honing your skills, testing your strategies without risking real capital.
It's like a simulator for the markets.
Exactly. Like study past market data.
Go back in time and see how your system would have performed under different conditions.
Right. And all of this practice should be done, with a well-defined trading plan.
Yeah, because Williams, he's very adamant about having a clear set of rules.
For every situation. What are you going to do before entering a trade? How are you going to react while you're in it?
It's about eliminating that uncertainty.
Trading with confidence.
Not making decisions out of fear or greed.
Absolutely. Having those entry and exit rules, a solid risk management plan, it's all crucial.
Yeah, it sounds like he's advocating for a very systematic, almost professional approach.
Like, you're not gambling.
Right, it's a business.
You're treating it like a business.
Yeah.
And that professionalism extends to emotional control, too.
Yeah.
Williams talks about how fear and greed can just completely derail even the most well-designed trading system.
Oh, yeah, I think we've all been there at some point.
Right. It's like fear can cause you to miss out on great opportunities.
Right.
And greed can lead you to hold on to losers for way too long.
So how does he suggest we actually manage those emotions?
He offers some really practical tips, like setting those clear risk limits we talked about, sticking to your trading plan, even just taking breaks,
Yeah.
To avoid burnout,
Right.
recognizing that trading is as much a mental game as it is a technical one.
And I think one of the most crucial mental skills you need to develop as a trader is this ability to detach from the outcome of any single trade.
Oh, yeah, that's a tough one.
That's something I've really struggled with.
Yeah, me too. He talks about how focusing too much on winning or losing can really just mess with your emotions.
Oh, yeah.
And your trading
It
performance.
could throw you off completely.
Totally. So he suggests approaching each trade as a learning experience, regardless of the outcome.
It's not about the result, it's about the process.
Focus on the process. And, accept that even the best traders have losing trades.
It's all part of the game. The key is to learn from your mistakes and use those lessons to improve your system.
It's not about being right all the time. I've heard a lot of traders say this.
Right.
It's about managing your losses effectively and capitalizing on those wins when they come.
That's the essence of what Williams is teaching. He's not promising that you're going to win every trade, but he is giving you the tools and the mindset to increase your odds of success over the long run.
Yeah, it's about consistency, developing a system that gives you an edge, sticking to it with discipline and patience.
Constant learning, evolving as a trader, that's the real secret to long-term success.
And speaking of secrets, there's one more key insight from the book that I think is incredibly valuable.
Oh, tell me.
He talks about the power of our beliefs and how they can significantly impact our trading performance. It's not just about having the right technical skills. It's also about cultivating a positive but realistic mindset. He talks about cultivating a positive but realistic mindset. Yeah, you have to believe in your ability to succeed, but you also have to acknowledge those risks, the challenges.
A balance.
Definitely a balance. Like if you're too overconfident,
Uh-huh.
you're more likely to take unnecessary risks and ignore those warning signs.
But then if you're too timid,
Right.
you might miss out on good opportunities because you're just afraid to actually pull the trigger.
It really is a delicate dance.
Huh.
You need to believe in your system, believe in yourself, your ability to execute, but also be aware of your own limitations.
And the possibility of being wrong.
Oh, for sure. You're going to be wrong sometimes.
So I guess it's not really about eliminating uncertainty completely, because that's probably impossible.
It is impossible.
It's more about accepting that it's part of the game
Right.
and finding ways to navigate it.
Williams actually encourages traders to embrace uncertainty,
Huh.
because trying to eliminate it completely can lead to that analysis paralysis.
Oh, yeah, I've been there.
And you just end up missing opportunities.
That's interesting, because so many people try to create these super elaborate systems to predict the market with 100% certainty. But he's saying that's just not realistic.
Oh, it's a fool's errand.
So instead, what's he saying?
Focus on what you can control.
Okay.
Control your risk. Control your emotions. Control your execution.
It's not about being right all the time.
No.
It's about having a process.
Exactly. It's like, think of a baseball player. They know they're not going to hit a home run every time they're at bat.
Right.
But they work on their swing, work on their technique. the mental game,
It's about playing the odds.
and tilting them in your favor. And that's what this book really teaches you. It's a masterclass in short-term trading, but it's also just a great resource for anyone who wants to understand the markets better.
Yeah, and it's a book that could honestly change your trading career, even your life, because it's not just about making money, it's about developing a more disciplined approach, thoughtful approach to decision-making in all aspects of life.
I couldn't agree more. It really does challenge you to think differently about things. Question your assumptions, constantly learn and adapt.
Well, this has been an awesome deep dive into Long-Term Secrets to Short-Term Trading by Larry Williams. We've covered a lot, from understanding those market biases and volatility breakouts to all the psychology of trading, the importance of risk management.
We talked about the COT report, the power of modeling those successful traders.
But as always, we want to leave our listeners with something to think about.
Oh, I like this part.
Something to maybe spark further exploration. So here's a challenge for you. Think about someone you really admire in the markets, someone whose trading style or track record you just find inspiring, and then take some time to really analyze their approach. Like, what are their core beliefs about the market? What specific behaviors, habits contribute to their success? What kind of language do they use to describe their trading process? By digging into these details, you might glean some really valuable insights that could help refine your own approach to trading, and maybe even unlock new levels of success. Remember, trading is a journey. It's not a destination, it's a process.
It's a process of constant learning, adapting, and refining your skills.
So keep learning, keep exploring, keep diving deep into the world of trading. And we hope you enjoyed this deep dive. We'll see you next time.